Banks at the G20 summit are going to be discussing whether or not to ban stable coins like USDT Tether, a coin that we're all familiar with. And so the real question is this going to affect Bitcoin? And is Bitcoin going to pump or dump in reaction to Tether or other stable coins potentially being banned as they have this now on the table at the G20 summit? And it's highly likely as the stablecoins do pose a huge risk to these central banks. And so we're going to be looking at some headlines alongside with the stock market turning bullish in a lot of people's eyes. But is this really the case? We're going to be looking at some technicals, talking about the bullish patterns that I'm seeing, but also the overhead resistance that could potentially come in play. But most importantly, we want to first look at our Bitcoin analysis here. You can see we've got this head and shoulder pattern here forming on the 4-hour chart, and we are now starting to break down from this head and shoulder. And as you can see, we've got this 200-week moving average that I've been talking about for quite some time now as being the potential target for us to have a solid entry for Bitcoin, as I don't expect it to come down and retest these lows. You can see we actually double bottomed here previously on March 20th, right around that 56.50 level, and I am expecting this head and shoulder pattern to complete itself down at this level before we see any sort of upside. I see we've got our live audience on the stream, Grant, Marwan, and Joshua. I'll talk to you guys and take some thought-provoking questions in just a second, but check this chart out. So not only are we seeing this head and shoulder pattern form, but we've got this overhead resistance that's also right along that 50-day moving average in red. And so interestingly enough, in the past, when this acted as resistance and actually dumped Bitcoin down to 3,900, you can see we initially just tapped that 50-day moving average and then initially went straight down. But now it's a little bit of a different scenario where we're kind of sticking upon that 50-day moving average, not necessarily immediately seeing a reaction. And in my opinion, that shows us that Bitcoin is going to eventually break this 50-day moving average. But for now, it's certainly acting as a resistance level. And so with that being said, and knowing that we've got this support level that proved itself today, which was the previous support level on December 17th, which was the bottom of the market before we went back up to 10,500, now we can assume that we'll come back down here, possibly come up to retest the $6,900 level before falling back down, potentially forming another bottom at that 64.40 level, and then creating this descending triangle pattern, which obviously is a bearish pattern, which could potentially take us down to that 200-week moving average. So highly probable that we've got not only a head and shoulder pattern, but we've also got a descending triangle potentially forming here. And interestingly enough, when Bitcoin today saw the dump down to around that 64.40 level, if we look at the total cryptocurrency market cap here, you can see initially that bottom that we just talked about from the 2017 bull rally that took us above 10,500 a Bitcoin, it actually didn't show that as the bottom here for the total cryptocurrency market cap. You can see we actually bottomed out a little bit above that. And so if we were to see a descending triangle form for Bitcoin, and then we start to see more downside, we can also assume the total cryptocurrency market cap will come down, and that will eventually bottom out here where Bitcoin is going to potentially bottom out in terms of market structure. But of course, at the end of the day, we have this 200-week moving average here as our potential target right around that 56.50 level that we're looking to find some solid entries for Bitcoin. And as we move into the stock market analysis, I want you guys to realize that at this current point, we're not necessarily correlating with the stock market or gold as much as we used to, but I think that's going to change here very soon. And the reason I think that that's going to change is when we look at gold, you can see we're also forming a head and shoulder pattern, a lot like Bitcoin, right? And so we know when Bitcoin bottomed out on March 12th at 3,900, the stock market didn't bottom out until around March 24th. So Bitcoin actually decoupled itself from the stock market, and that's why it's outperformed the stock market since that recent bottom. And looking at this chart, you can see gold is certainly bullish on the macro time frames, but when we go into a 1 hour and a 4 hour chart, we are seeing some potential bearish patterns forming. So I believe that gold might eventually come back and couple itself with Bitcoin, which would probably be the best case scenario. It's a scenario that we've talked about in the past, and it's a scenario that will allow Bitcoin to continue to see upside whether or not the stock market continues to see downside. And so understand that the equity markets and Bitcoin are highly correlated, but at the same time, we've seen a strong correlation in the past with gold for Bitcoin. And at this current state of our economy, I would rather see Bitcoin coupling with gold than I would see Bitcoin couple with the stock market. And so, interestingly enough, when we look at what's going on in the Dow Jones Industrial, you can see we've also got a bullish pattern forming right now. I do believe there is a potential for some further upside in the equity markets. We've obviously got a bullish pattern forming right here on the micro. In the macro, we're still going to say that we're bearish since obviously we're not at the highs that we were at in the beginning of the year. But understand that we've got these two overhead resistance levels at the 50-day moving average as well as the 100 and 200-day moving average that could allow the Dow Jones Industrial to go ahead and still see some upside into those levels. And we are forming this ascending triangle formation as well. And we actually saw this form with Bitcoin earlier in the month. And of course, that broke out and took Bitcoin above 7,000. And so there is a probability that we're going to see strength in the majority of markets. We might even see gold sell off and Bitcoin sell off and equity markets show some strength. But at the end of the day, I do believe the strength in the equity markets are going to have to end, and it's going to either be at that 50-day moving average or the 100 and 200-day moving average. And if we actually did a Fibonacci retracement, interestingly enough, you can see it kind of coincides with a 618 correction. And so I'll pull up the Fibonacci here for you so you can see exactly what I'm talking about. Let me go ahead and pull up the Fibonacci retracement for you guys so you can see what I'm talking about. So not only are we seeing that potentially happen here, but you can see we've got that 618 level right in between that 50-day and that 100-day moving average. We've already come up to test that 50% retracement twice. Typically, if that continues to come and test it, you can see we kind of went a little bit above that. I do believe it will break. And then you can see really that 50-day moving average has recently crossed into that 618 and that 50 level. And so for us to see a resistance around this area, potentially even at that 618, I think would be a good area for the bears to trap themselves. And obviously, we've seen a lot of people shorting the market here around these lower levels. But of course, they're getting slapped with pies in their face, being the fact that they're not able to cover their shorts when we see price action pump to the upside. And we saw the best weeks in the stock market in the last 3 weeks, obviously after all of this downside. And so understand that there is that potential for gold to start to sell off, liquidity flowing from gold into the equity markets for the short term at least, and for the equity markets to see some gains. If you look at some leading indicators here, interestingly enough, this is the QQQ symbol, and I like looking at this as it's the technology sector of the stock market, and it's one of my leading indicators. And you can see we've already broken above all the moving averages on this, and you can see that correspond with some of these tech stocks. You can see Amazon, for example, breaking new highs, Walmart breaking new highs, but then you've got all of these other tech stocks that are doing very well right now, and they're really the ones leading this bullish charge, because if we look at some other market leading indicators, you can see it's just not the case here. And therefore, in my opinion, I do believe there is some more potential upside, being the fact that the tech sector has so much bullish momentum here. But when we look at the iShares Trust here, you can see not the case, still very bearish. This is one of my favorite leading indicators for the indices. And then, of course, if we look at transportation, you can see as well, not showing as much strength, still far and below these daily moving averages. When we look at semiconductors, you can see a little bit more strength, but not necessarily the type of strength that we're seeing with the tech. Of course, semiconductors kind of have to do with the tech sector, and so you can see we're already breaking through some of these moving averages. And so it looks like a lot of these equities want to break through the moving averages before they see any sort of continued downside. You can see the financial sector not showing so much upside right now, but has that potential as we're currently retesting this breakout level. And obviously, if we ever break out, we want to eventually see a retest. And so we're currently at that level. And if we look at future indices for tomorrow, you can see it's almost as if we're getting a fake out here where we've got the major indices in red right now. But when we look at commodities here on the right, you can see crude oil, Brent oil, gold, silver, soybeans all doing really well, pre-market. And so, I think this will eventually translate into the indices, and we may potentially have a green day tomorrow when it comes to equity markets. And we kind of need a green day, to be quite frank, just because of the fact that when we look at the Dow Jones Industrial, you can see we've got this this ascending triangle here forming on the hourly chart, and we're kind of coasting along that support level right now. And so I think that there is that potential right now for us to see a breakout in the equity markets. That could potentially happen if gold completes this head and shoulder pattern, liquidity comes out of gold. You can see on the macro chart, of course, we're bullish, we're at these new highs, but eventually we're going to have to see some liquidity come out. And I think a lot of that will get trapped in the equity markets. And of course, that could bring equity markets up. But then we can potentially see Bitcoin couple back with gold, which would be a very positive thing. And at first, it might lead to some more downside because you can see Bitcoin also in a head and shoulder formation. But then at that 200-week moving average, I think that could give us enough time to potentially consolidate along this region, as Bitcoin typically likes to do when it bottoms out, as we've seen in the past. You can see here there was a major consolidation. If you guys have been keeping up with our videos on a weekly basis, we've shown a lot of charts that show how Bitcoin typically likes to bottom and consolidate. It doesn't typically like to just quickly wick into its bottom and then come back up. So I definitely believe that anything below that 200-week moving average was a great accumulation zone. You can see that's proven itself by the volume, but anything at that 200-week moving average, in my opinion, would still be a solid entry. And then at that point, gold can couple itself back with Bitcoin, potentially allowing Bitcoin to then see new highs leading into Q3 and Q4. And so I want to go into some more of my thoughts about the central bank and them potentially banning stable coins. We're going to look at some historical coin market cap charts to see how Tether played a role in the initial rally to 20,000 for Bitcoin. So if you guys are enjoying this content so far, make sure to like the video, subscribe to the channel if you haven't already. But I do want to bring this article up. You can see central banks recommend to ban stablecoins. I'm not going to go through this article. I'm sure you guys have heard the news already. Of course, they're putting this on the table for the upcoming G20 summit. And I believe that it could be a big probability that it happens, just because of the fact that having a stable coin is a big threat to central banks, as at the end of the day, it's a centralized authority creating these coins. And it's almost as if it's its own government printing USDT and pegging it to the main currency of the world, which is the US dollar, where 70% of the world's currency is based on the US dollar. And therefore, it is almost like a fraudulent version of the US dollar, at least probably in the government's eyes. And it allows people to bypass fiat currency. And right, so a lot of people are saying that this could lead to a drop in liquidity for markets, but I think that's actually the opposite. So I'm going to have this coin market cap historical snapshot pulled up for you. This is from December 3rd, 2017, when Bitcoin's market cap was at $189 billion, right? That's pretty much bigger than the market cap that we currently have for the total cryptocurrency market. Understand, in December of 2017, Bitcoin was not 70% dominant in the market. It was a lot less than that. And so, interestingly enough, when you look at this chart, you can see USDT not playing as big of a role as it's playing right now, where volume was under a billion at this time. Bitcoin's price was soaring through the roof. This is halfway through its rally to 20,000. And you can see here, the market cap for Tether was also less than $1 billion at that time. And so people really weren't using Tether, and Bitcoin was still able to rally itself to these extremely high levels. And then it wasn't until the bear market that USDC came out, The other stable currencies started to come out, and of course, since then we haven't even seen Bitcoin at 20,000 US dollars. And so a lot of people are saying this might be a negative thing for Bitcoin, but I think the opposite. I think this could be a very positive thing if it happens for Bitcoin, because right now, if you look at the current coin market cap chart, Tether is actually number one in comparison to Bitcoin when it comes to total volume in the last 24 hours. So a lot of people are using Tether, and it's almost taking liquidity away from Bitcoin more than it's providing liquidity for Bitcoin. Of course, there are certain scenarios where we'll most likely see a drop off in liquidity because of USDT not being around if it is certainly banned. But I think at the end of the day, it's going to be a good thing for this market, because if we're not seeing any sort of false manipulation with Tether, and that increases the confidence in investors, it's just going to bring us one more step towards regulations, and it's going to bring us one more step towards mass adoption as more people will trust Bitcoin, knowing that the only way you can obtain it is through fiat currency and you can't bypass it, right? And so I think it's going to legitimize things a lot more for Bitcoin, because, of course, the governments can't ban Bitcoin, but they can certainly ban these tethered currencies. Of course, we know USDT already in a lawsuit right now with the United States government. And so, interesting enough, you can see here with a $6 billion market cap, Bitcoin's market cap is even less than it was back here in 2017. You can see we even had a larger market cap for Bitcoin, and right now we are a lot less than that. And of course, you can see obviously a big portion of that is being taken up by USDT. And so I don't think it's a bad thing. I think it's a great thing. Obviously, a lot of people have had a lot of concerns about USDT and the role that it plays in this market. And so I'd love to hear you guys' opinions in the comment and chat about that. L on Twitter says, "What's up, man? Happy Friday, Junior." Thank you. Todd Physique on YouTube says, "Norm, make it happen." Todd Physique says, "What other crypto are you bullish on?" Really just Bitcoin. I talk about altcoins all the time and the lack of use case that we've seen. SK says, "Crypto has evolved without stablecoins and will survive without stablecoins. It's time we will soon see a decentralized stablecoin." And I think that coin is going to be Bitcoin. I think that in itself is the decentralized currency, and people are going to have to be forced to deal with the volatility, and they're not going to be able to bypass fiat currency. So I think that's a great thing. A lot of other things happening for Bitcoin right now are showing a lot of bullish signs. So confirmed transactions per day has always been a leading indicator for me in regards to assuming we'll see higher price action. And so as much as we talked about that head and shoulder pattern forming, the descending triangle that's potentially forming, and some lower levels that could come, I do want to play the umpire here and show you guys the bullish fundamentals that I'm noticing with Bitcoin. Because if we look here, if we look at confirmed transactions per day, I actually was able to predict the bottom of this market downturn because I started to see transactions per day rise. And as you guys know, we've been known to predict the top and bottom of these macro time frames, and a lot of that comes from these leading indicators that I like to use. And one of them has always been the confirmed transactions per day. And so realize that currently we are seeing a 300,000 transaction per day level stabilize as we were pretty much always at for the duration of the last 6 months and the last year. Of course, that changed when we saw all of the markets dump. But as a leading indicator, it's showing that confirmed transactions per day is increasing. And then, of course, the other leading indicator here is total hash rate. You can see anytime it almost follows Bitcoin's price in a lot of ways. But you can see here, anytime that we've seen a dump here, we've seen a dump in price, but we're only seeing more upside for hash rate as we approach the halving or the halvening or whatever you guys want to call it in less than 30 days when the supply gets cut in half. So interestingly enough, with hash rate increasing, confirmed transactions per day increasing, those are very bullish signs for me. Fear and greed index, it was at 8 on Monday. Now it's at 13. And so we're starting to see a little bit less fear in the market. But I still think that there's going to be one more last hammer to the nails I've talked about in the past. We've obviously got this bearish formation here, this head and shoulder pattern forming. We've almost confirmed that this is going to be the case as we've already broke the neckline of this head and shoulder. And then Interestingly enough, we have a double bottom here at my target at that 200-week moving average right now. And so I think it's just a matter of time before we start to see movement. And I think it's going to come here very soon, especially as we start to see some uncertainty when it comes to equity markets and gold and where people want to leave their liquidity. I think there are a lot of people FOMOing into the stock market right now. But what they don't realize is unemployment numbers come out tomorrow, or really it's tonight because it's already past 12. So at 4:30 a.m., in less than 5 hours, unemployment numbers come out. So we'll see if it's above expectations as it has been over the last 3 weeks. Already 17 million jobless claims filed in the last 3 weeks. So let's see where that number leads us to. Obviously last week when we saw 6.6 million jobless claims, we saw the stock market rally to highs that it hasn't seen in quite some time. I mean, in terms of percentage gains, we saw some of the best days ever in the stock market after seeing that statistic. So I'm interested to see what's going to happen. I have a feeling though that we're going to see this triangle here really play its part. I think especially with commodities right now, if you look at these futures markets, you can see we were almost at 200 points down. Now we're about half of that for the Dow Industrial. But really, it's these commodities showing here that we might have a green day in the market tomorrow, allowing this to all play out as we're talking about, where we have an ascending triangle here and we've got these moving averages up above acting as targets, and then right into that prime zone when it comes to Fibonacci retracement, we've got the 0.618 and the 50% correction. And so I think that that's going to be highly probable with more FOMO coming into the market, especially as we see some of these big tech stocks see new highs. Interestingly enough, you can see Amazon seeing so much strength on the daily chart. You can see new highs, so Jeff Bezos is definitely not having a tough time during this whole downturn and this potential depression, right? So when we look at these leading market indicators, what you can see here is the only one that's really showing that we're going to break above all of these daily moving averages are the technology sector. It's the only one so far that's broken through. When we look at transportation, all of these other ones, it just hasn't yet broken through. And so I want to take a couple questions from our live audience, and then we will wrap this video up. Remember to like the video if you guys appreciate this content, and subscribe and turn on your post notifications, because we go live every Monday, Wednesday, and Friday, and it's typically when I'm done with my research, so I don't have an exact time. And so that will make sure you guys are up to date. Todd Physique says, Naeem's spitting facts right now, though. Hopefully I'm not actually spitting, but thank you. I appreciate that. Dave Jones said, whatever happened to Sniper's Coin? Well, when we realized that all ICOs got sued by the SEC, I realized that it was a good decision not to proceed with that and rather proceed with the educational side. Now teaching over 20,000 traders, or at least in our Discord, how to trade here. So let's see what else we've got here. ALOC says, if USDT is banned, what happens with my USDT assets that's saved in Binance? Well, we don't know if it's going to get banned yet, but what we do know is it's going to be on the table for the G20 summit as a recommendation. And I think that it's a highly probable recommendation. The SEC already hates Tether. They're already in a lawsuit with them. But I believe it's going to be positive for the market. It's going to bring us one step towards regulations. Realize that the crypto market right now, it's primarily derivative trading, not spot trading. And that's not how the majority of these trillion-dollar markets like gold, commodities, equities, these are trillion-dollar marketplaces that thrive on spot, not derivative, right? And so when we saw that huge downturn below 3,900, or at right at 3,900 for Bitcoin, and then BitMEX had to shut its exchange down because they were afraid that prices were about to go to zero. It's because of that issue with the liquidations and the shorts. And so you don't see that issue in other markets, but that's why, as there was a billionaire, I was watching a podcast, I think his name is Chatme. I'm pretty sure you guys have heard of him, but he talked about Bitcoin being almost like in the ghetto right now, where it's just really meant for traders. But if it really wants to be that storage of value, that preservation of wealth, and be similar to gold, it needs to come out of that stage, right? And so that's really important. Jordy Tames on TradingView puts the money emoji. Interesting. So Grant says, great analysis once again, my friend. Thank you so much. I really enjoyed my last video. If you guys didn't see my video from yesterday, the link is in the description. Phenomenal video. I did a lot of analysis on Bitcoin, and we kind of predicted all of this happening too, with the bear flag and the head and shoulder pattern. Todd Vasico is, what percent of your portfolio is in BTC? Personally, I trade Bitcoin and I find a lot more success trading Bitcoin. I've been in the market since 2011, and because of that, for me, it's just something that's easier to do and results in more profits. But at the end of the day, I dedicate 10% of my working capital towards trading, and then the rest of my capital is diversified amongst other assets. Of course, part of that is Bitcoin. And then I have a simple dollar cost averaging strategy that I utilize on a weekly basis for Bitcoin, regardless of what the price is. I buy the same amount every week. I know a lot of people like to buy the dip and stuff, but no, I allocate a very, a specific percentage of my portfolio towards dollar cost averaging into Bitcoin. But I'm more focused on the trading side of it, as I've seen success in that over the last 3 years, more than anything else. And so, my real strategy with trading is to take that 10% of capital and then multiply that and double it, and then take the 10% that I make in profits, put that aside into long-term holding, and then play with the 10%. And I've blown the whole 10% before, but when you double the 10% 8 times out of 10, you always end up positive at the end of the day. And that's what trading is. It's an 80-20 rule, right? It's to be right 80% of the time and not be wrong 80% of the time. And doing that by understanding technical analysis, the fundamentals, and just being aware and managing risk and preserving capital, right? The three biggest focuses for me are: number one, what's the overall trend, right? Because the trend is your friend. And number two, it's going to be price action. What's the volume looking like? How is price action? If we're hitting a support level, but we don't see major volume coming in, then it might not be a support level for too long, right? So understanding price action is extremely important. Then market structure, one of the most important things when trading is understanding previous market structure, understanding the support and resistance levels from the past, and then potentially what formations are happening. Obviously right now we've got the left shoulder, the head, and right shoulder clearly defined on this chart, and I am expecting this to play itself out. And then, of course, as we talked about, we also have that descending resistance level coinciding with that 50-day moving average. And when I see confluence like that, it gets interesting. One thing I also saw with the equity markets that might interest some of you guys is there also is a very specific divergence, a bullish divergence forming here. I'll actually pull it up here. If we pull up let me pull up the chart that I had here of the Dow future markets. So interestingly enough, if we pull up the RSI, and by the way, for indicators, I like to use them as confirmation, not as a leading indicator. But if you go to this 4-hour chart, interesting enough, you've got this potential divergence forming here, this bullish divergence as well. So you've got this descending level. I'll just draw the support out for you guys so you can see it. You got this descending level here on RSI, but then you've got ascending support on price action. So another bullish confirmation for equity markets. And of course, when we look at future markets right now, commodities seem to be doing well. At first, I was a little bit worried that we were coming down for a third retest of the support, but you can see initially we retested that support twice. So I wasn't too concerned on that. I think that with the amount of market uncertainty and the sell pressure, that's kind of expected. But I think this is going to play a big part in what's going to happen here, because if we start to see this breakout, I think that as soon as this new resistance level breaks out here, and this is the Dow Jones Industrial, I think as soon as that happens, that's going to be the time that we see gold play out inside of this head and shoulder. And then we're going to see a ton of liquidity FOMO in to the equity markets, right? And then that's going to be enough for the equity markets to hit the 50-day moving average, the 100 and 200-day moving average potentially. And I think from that, being the fact that Bitcoin is also in a head and shoulder formation, it's going to allow Bitcoin to couple itself back with gold. Now, the good thing about all of what I just explained is the fact that gold, yes, might be a little bit bearish in the micro, but in the macro, it's extremely bullish. And when I say extremely bullish, I'm saying extremely bullish. If we look at this weekly chart and you look at these moving averages, look how far away this 50-week moving average is from that 100 and 200-week moving average. And we never saw that ever, right? Only in a bull market. Look, you can see they were just converging back and forth here. You can see here it was below all of the other moving averages. The only time we saw that was when we really saw the big pump in 2011 and 12 for gold, is when that 50-day went far and above all of the other moving averages. So it's the first time in a very long time that we're seeing this happen. And so to me, that is showing that we'll potentially see new highs for gold. And if that's the case, Bitcoin currently in the micros correlating itself with gold, that could be very positive because that could allow Bitcoin to see the new highs that we've been talking about. And then on top of all of that, realize that Bitcoin's already shown that it's going to potentially decouple itself from the S&P 500 because Bitcoin bottomed out on March 12th while the S&P bottomed out on March 24th. So that decoupled already happened. So it's almost as if Bitcoin was going down. It's like, yeah, we're following the stock market. We'll eventually go to gold. We just want to follow the stock market. And then Bitcoin's like, whoa, 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 this is too much. All right, release. It released its parachute and said, I'm out. And it stopped coupling with the stock market and equity markets. And of course, equity markets are still on their way down, it seems like. It's just maybe the passengers are a little bit more calm because they're floating on their way down. But what they don't know is they're still going down. And so, with unemployment numbers coming out already, a potential 10% to 20% unemployment rate, it's just the fact that think of something in your life. For everyone watching this on YouTube, Twitter, Facebook, wherever you guys are watching, just think of something in your life that was going really good for a long time, and then suddenly something happened, right? Something happened, whether it was in your control or out of your control, something happened and it completely stopped what was going really good in your life, or what was not only going good, but has been going good for a while. What typically happens after that stop, right? It's a shock. It's like a tsunami, right? When you look at what happened in Hiroshima when the nuclear reactors overheated and blew up, it was caused by the tsunami, right? So they had a tsunami, and Ray Dalio actually said this if you watch our video on Monday. That's why I really like that video on Monday if you haven't watched it. But Ray Dalio said it's like a tsunami, right? So the tsunami comes just like what happened in Hiroshima, and coincidentally enough, they didn't plan for a tsunami, and so they had their generators under the water walls of the nuclear plant. And understand, when a nuclear plant loses power, that's the worst thing that could happen because now it's not regulating its temperature, and then it becomes like this pressure cooker, right? And so the tsunami happened, and then guess what? The nuclear plant eventually blew itself up because the generators were wiped out from the tsunami because they wanted to put it under the water walls, but the tsunami went right over the water walls, and then we saw the nuclear reactors blow up. Same thing here. The virus, the pandemic, was a tsunami. Equity markets, all of these markets, global economies shattered immediately, but the recovery is going to take time because the economic ramifications have yet to be completely unveiled because we don't know. It's a domino effect. We don't know what is going to happen. I think Google already announced they're going to stop hiring as many people. Well, with unemployment rates skyrocketing, people are like, oh, well, they'll just get rehired when things open back up. Well, not if companies are not hiring as much. And so it's a domino effect. And so I think we're in a bear market. Ray Dalio thinks that this is worse than the Great Depression. And if you guys want that Great Depression analysis compared to the current correction, we already talked about what happened in 1929 to 1934, where we initially saw that 37% drop and then a 54% correction, and then we went 90% down, right? I don't think we'll see a 90% decline, but I do think that that 50-day or that 100 to 200-day will act as resistance in the equity markets. And then eventually Bitcoin is going to couple itself with gold as we start to see continued decline and sell off in equity markets. So Eduardo says, can you talk more about real estate? I'll talk more about real estate later because if you look at 2008, right, the housing crisis didn't happen until 2009 and 10 and 11. And so real estate is a delayed economic factor when it comes to a recession or a depression. So expect real estate to really get the hit in a year to 2 years from now, 3 years, and then just expect a ton of short sales on the market and bank-owned property, right? So I've got a lot of real estate friends that own millions, if not billions in property. I was part of Grant Cardone's investment group. I've been around him, and what I will tell you is they're expecting a lot of short sales. A lot of them are opening up LLCs right now, getting ready for some foreclosures and to take over properties. And so give it a year to 2 years, 3 years, and that will happen. Because if you look at when the housing market bottomed, it was 2012 after 2008, right? So that takes time. So let's see here. Naeem, what are you talking about, my man? BTC will dump. Simple as that. No need to analyze anything. Well, that's what we're talking about. That's why we've got a bearish head and shoulder pattern pulled up here. I see we've got a troll here saying, oh, are you running Forex? Oh, whatever. We got to get him banned, right? That's what we got to do. Sean says, boot this guy. All right, well, I'm going to head over to the Discord. I appreciate all of you guys tuning in. Look at future markets. Now the Dow is 75 down, right? So it was around 200 earlier, 75 now. I think we'll see a green day. I think it was a quick fake out. Brent oil already over 1%. WTI crude over 1% right now. So I think we'll open up in the green. I think we'll open up in the green. I think that this bullish ascending triangle for the Dow is going to play itself out. And then I think that's going to cause a sell off in gold, cause a sell off in Bitcoin. The head and shoulders are correlating at this point, and so we can assume that market structure is very similar between Bitcoin and gold, which is a great thing because gold is very, very bullish in the macro, but very, very bearish in the 1 hour and 4 hour time frames because it's already seen new highs, right? So it finally caught up with future prices because we saw that gap for a while, right, where futures were over 1700 and the spot price was less. But now that it's caught up, I think it's going to be time for a correction. I think that's going to cause Bitcoin to correct and then recouple itself. And then eventually that capital has to flow somewhere, flows into equity markets. We see a top out 50-day, 100, 200-day moving average. I think that's highly probable, right? Or if it's not, then we'll have to update you guys on Friday and see what happens. But I think that that's the probability here. Um, so other than that, thank you all for tuning in. And somebody says I reported that guy. Thank you guys. I just don't have time to deal with all the debauchery. So appreciate all of you guys tuning in. See you guys on the Discord. And until next time, snipers out.